Go ahead and start. All right, everyone. Thank you so much for joining us for today's home buyer webinar. We love doing these because anytime we have an opportunity to go ahead and provide information that can help someone achieve the American dream of home ownership, we're all in. We love this format because by Zoom, we can reach a wider audience, maybe the entire state. Who knows? It might be folks from other states here. In fact, why don't you go ahead in the chat area right now, post where you're from. All right, we want to see what city and state you're in, whether this is solely a Florida group or by virtue of advertising on social media, we have individuals here from other states that are represented. All right, so let's go ahead and start with the beginning. We will take plenty of questions. In fact, you can use the chat area to go ahead and type in questions along the way. And then we'll pause for you can actually unmute yourself and go ahead and ask these questions. But I'm going to go ahead and kick it off. I'm kind of like the host, but I'm really just here to do more of an introduction and a little bit about the some of the practical reasons why being a homeowner is just infinitely better than being a renter. But the real meat and potatoes of today's presentation is going to be done by our preferred lenders because they're going to get into the weeds in terms of what do you really need to have to get financing in today's day and age. But my name is Tony Martinez. My wife and I are the co-team leaders of Extreme by LPT Realty. We're a very large team based out of South Florida, but we have agents all over the state. We're very blessed to have accomplished quite a bit in the past few years. In fact, last year we were ranked by Real Trends as number 12 or 12th position by size. That means by transaction size among enterprise teams in Florida. And that's just a fancy term for teams that have over 50 agents. We actually have 110 agents on our team. It's probably one of our agents that actually invited you to be on this call here today. And by volume, we're 22nd in the state. So this is not about bragging. We give all glory to God for anything that we've accomplished, but it's to say that we do this for a living. This is not a hobby for us. It's not a job. It's not a profession. It's a passion. We just enjoy helping people. So we do these as a way of educating folks because there is so much noise going on in the industry right now, so much misinformation. And we just feel that we owe it to the public to go ahead and just bring forth some truth. And you know what? The truth can be that maybe, just maybe, it's not the right time for you to buy. Or maybe, just maybe, you don't qualify to buy right now. But you know what we like to do? We like to go ahead and give people hope and give people a plan, because some of you may be able to purchase today and some of you may need some help and an action plan to get you there in 3 months or 6 months or a year. For us, this is a long-term commitment that we're making to helping you achieve your goals. As I mentioned earlier, the true heavy lifting is going to be done by our two wonderful representatives from Clear Choice Lending Group. We have Lynette Fernandez, who is an amazing loan officer. And, you know, I can honestly say I've known Lynette her entire life because she's my firstborn daughter. So as a father, I could not be more proud of her, that we work in the same business. And then Jory Rivero, my goodness, if I only had a portion of his knowledge when it comes to the loan side. This guy, when I say that he will forget more about loans and mortgages and most people will ever learn, it's not hyperbole, it is the facts. The man knows his stuff. And so they're going to really, really break it down for you so that you understand exactly what is going on and what you're up against. Did I lose my camera? No? Am I still?
No, yeah.
You
You lost
broke
the
it.
camera. Your
You
screen's still
broke
up
the
Okay.
for
camera?
you.
You know,
You
I,
people
broke
I
the
just
say
see
I
your
have
camera.
a
photo.
yeah, people say I have a face for radio, and this could actually be one of those scenarios where my face actually broke the camera. Well, you know what? You don't need to have this is even better. I think we actually are going to keep people longer on the Zoom this way than any other way. So here's what we're going to cover because we really want to go fast and furious. I promise you guys are not going to be here any later than 10 p.m. tonight. I swear to God, by 10 p.m. you're done. No, one that we
He's
go to
kidding.
10 p.m.? No, 8:30, maybe even
We're
less.
gonna try to beat that. We're gonna try to
We're gonna
beat
try
that.
to, yeah, we're gonna beat that slightly, but yeah, we're scheduled to go on to 8:30, but I don't see any way, shape, or form that we're gonna go a lot further than that, unless you guys are just like, man, we really, really want to keep listening and everything else. But I think today is more exploratory, is to kind of go ahead and say, hey guys, this is what is going on out there, and then for more information, here's how you can go ahead and set an appointment to have a consultation. But we're going to talk about home ownership versus renting. We're going to talk about the state of the real estate market right now, where to begin. If you are, in fact, interested in being a homeowner, where do you start? What role does the realtor play in the equation? Why should you work with a realtor? How do you go ahead and select a realtor? And then, of course, I'm just going to hand it off to Joey and Lynette to go ahead and talk about the various financing options that are out there. So let's go ahead and talk about owning versus renting. Are there any advantages to being an owner versus a renter? Absolutely. So let's go ahead and start with this thing called forced savings or building equity. And you know what I would like to do? Let me see if this will actually work, because sometimes technology works and sometimes it doesn't. I'm trying to see, my camera will not participate, will not do it, but let me see if I can do this and go ahead and go to, of course not, that wasn't going to work. Let me see here. I'm going to try this. All right. Then I'm going to go back to here. I want to play a video for you if I can, if the internet gods will allow. Okay. You guys see that screen there? Okay. All right.
You're gonna see
And,
a great skills, camera skills
okay.
here.
All right. So let me see. I think they came out with this video just a few days ago, and I think it really strikes to the point of why buy as opposed to renting. Okay, so that's not what I wanted. So let's try this.
Hey Joey, I have a question.
Yeah.
I was just on the phone with someone who's renting, and they're asking like, why should they buy as opposed to continuing to rent? What would you say?
I hear that all the time, and I'll tell you exactly what I'd say. And I want to show you this.
Okay.
So let me check this out. So for this example, I'm going to use R for rent, O for own. All right, so let's use $3,500 a month in rent and $3,500 a month in a mortgage payment. This is pretty average in South Florida, right? Over the next 10 years, this $3,500 will have costed you $420,000 out of pocket. And so would the mortgage, $420,000 out of pocket. Now, that sounds like a lot of money. Here's the situation. On your rent, did you pay down any principal? No, you sure didn't. On your mortgage, how much did you pay down? $90,000 approximately. That's a pretty big significant savings. Appreciation, did your rent appreciate? Probably not. In fact, your rent probably went up, but we're not going to use that for this calculation. Your home, I'm using a very minimal appreciation of 1%. So over 10 years, your $420,000 home appreciated another $63,000. Okay? So how much equity did your rent create for you? Zero, but it helped that owner of that property create equity. So really, how much did this place cost you? You had $420,000 out of pocket to rent the property. In this situation, yeah, you paid $420,000, but at the end of the day, you walked away with $153,000 when you go to sell that property. Hey, Joey, I have a question.
That was pretty cool, right? I think that's just a very, very simple way to go ahead and share what I believe is one of the advantages of home ownership, and that is the ability, the potential to build generational wealth. Now, here's one of the things that I like to say, because look, every industry has its bad actors, and real estate has no shortage of agents that will tell their prospects, their customers, whatever they want to hear, if it means getting the sale. And one of the things that I'm a firm believer is that no real estate agent that's ethical will ever guarantee a buyer that equity is automatic, equity is guaranteed. Okay. Now, can we say with certainty that historically owning real estate is one of the safest investments you can make? Absolutely. Historically, have property values gone up? Yes, with the exception, I think, of twice in the last 40 to 50 or more years, we've seen real estate prices actually come down. But no real estate agent that's ethical is going to say, folks, you buy this home today and you will absolutely are going to see equity as a result of it. Is it likely that you will? Yes. Is it guaranteed? Absolutely not. But here's what I can guarantee you, that all the money you're paying that landlord is not going to build any wealth for you whatsoever. You're building the wealth for that particular landlord. And I'm not anti-landlord, folks. We need landlords. Without them, a lot of people would not have a place to live. But here's what I'm big on. I'm big on building generational wealth. I think as a parent, I want to see my kids do better than I did. And I want to see my grandkids do better than their parents and me. And historically, real estate is one of the best ways that you can go ahead and build that generational wealth. And if some of these terms, maybe you're not familiar with what exactly is equity. Well, equity is the difference between what you owe on the property and what you can sell it for. What you can pocket, that difference is what is called equity. So, you put down payment, usually there's a down payment involved to buy a house. Well, that's kind of like the difference right there. But the hope is that over time, that as a result of you paying down your mortgage and as a result of possible appreciation, you're going to see the difference between what you owe and the difference between what you can sell it for continue to grow. And that is the equity. Now, tax advantages are unbelievable because I'll tell you what, man, unless they change it sometime in the future, I don't know, when you have a home, right, when this is your primary residence, and when you're making that mortgage payment, the vast majority of what you're paying on that mortgage payment for the first few years is interest. Well, guess what? We get to write off that interest. And for a lot of people, it makes a huge difference whether they're owing Uncle Sam at the end of the year or they're actually receiving a refund. We're not making any kind of tax or giving tax advice here, but we always say, you know what? I think you should look into the tax advantages of being a homeowner. Personal lifestyle preferences. I just love the fact that, and I do believe in starting off at wherever you're at. I mean, I know what it's like to start off at a condo and build up to a townhouse and then you start a home and everything else. But home ownership just gives you of eventually having that lifestyle that you always wanted. I know Joey is a lake guy. He loves having a lake property with his boat and everything. That's a lifestyle preference. I'm blessed to have something similar as well. So that's something that you could shoot for, whether it's by the beach, by the water, by a golf course, equestrian. It's one of the things that you can go for. Now, who says that a mortgage is eternal? They're really not eternal, right? In fact, the whole premise of a mortgage, it comes from the Latin term muerte, which is to kill off what you owe, right? So the whole thing is that most of us are used to what is called a 30-year mortgage. And I'm going to let them do all that talking there. But more and more people, they actually compare the differences between a 15-year and a 30-year, and they realize, I think I can swing the payments on the 15-year. And guess what that does? That saves you tens, if not hundreds of thousands of dollars in interest. And guess what? Within 10, 15, 20 years, you can actually be debt-free and you can own that property outright, which is such an amazing, amazing feeling. And ultimately, it's the pride of ownership. My parents, I'm an immigrant. My parents came from Cuba in 1965. I know how proud we were when we bought our first home. And we bought it in Opelika, Florida, Carroll City, for a whopping $24,500 for a 5-bedroom, 3-bath home. And I remember contributing $20. That's right. I contributed $20. So I was all in on that thing. And listen, I tell you what, this is the greatest country on earth. And when you have a chance to actually own a piece of it, there's nothing like it. Now, something that's not on this slide, but I'll throw this in here. Let me tell you something. I work very closely with distressed properties and distressed homeowners. And, when you're a renter, when you're a tenant, you really are at the mercy of what that landlord decides to do or not to do, right? They can decide not to rent it to you anymore because they want to move in themselves or move a family member in. But what's even worse? When you rent a property and you think you have a lease for a good year and 2 or 3 months later or less, someone's knocking at your door and they're serving you papers because the landlord has not been making the mortgage payments, and now you're in foreclosure. So what kind of security is that, right? Now, the state of the market, folks, people ask me all the time, what's going to happen with the real estate? I go, look, I have my crystal ball on order from Amazon, but the shipment's been delayed. I guess there's a lot of people ordering crystal balls. Here's what I like to ask you, and you could, go ahead and post a question or the answer in the chat area. But are we in the seller's market or are we in the buyer's market? What is your humble opinion right now? And I'm not asking the real estate agents on there. I mean, what you say? I'm kidding. What part was I kidding about, Joey?
About the class being till 10 p.m.
Oh, okay, all right. Yeah, because there's some people that go, but what kind of market are we in right now, folks? For those of you, the non-professionals in the audience right now, if you had to take a guess, it's 50-50. Are we in a seller's market or are we in a buyer's market? Come on, come on, come on. They promised me a live audience. What do you think? What do you think the answer will be? Anyone? Someone? Bueller? Anyone? All right. It's going to be one of those kind of webinars. Okay. All right. Well, here we go. All right. So Maria says,
I'm sorry. What is the question?
The question is, are we in a seller's market or a buyer's market right now? Who's got the leverage? Another way of phrasing this, who's got the advantage? Who's got the leverage right now? Okay. The sellers or the buyers?
Sellers.
Okay, sellers. Okay. So here's the thing. And again, you're welcome to go ahead and check this against whomever you believe knows what they're talking about. But the answer really should start with, well, it really depends on where you live, right? Because real estate is local. So there are certain markets in the country that are still very much a seller's market. Now, if you can remember back as far as 2021 and 2022, the real estate market that we had back then, the insanity that we had back then, that is the pure personification of a seller's market. Hardly any inventory at all. Sellers, buyers insane to buy. Sellers having all the advantages, 20 and 30 offers on a property, selling properties for $50, $60, $100,000 over asking or appraised price. Yes, that was a seller's market. Are we in that kind of market right now? For the most part, in most markets, absolutely not. Now is a fantastic time to be a buyer in many markets because we have seen inventory go up. Okay, people have to sell for a variety of reasons, whether it's forced or lifestyle changes. But right now, we are seeing more sellers than ever being willing to lower their prices, give concessions, and be a lot more flexible than they ever were before, or at least in the past 5 years. So this is something that should encourage you, because if you were trying to buy a property in 2021, 2022, it was a nightmare for buyers back then. And there were many buyers that just bought whatever they could get their hands on right then and there, and they regretted it. They regret it. Many of them didn't even do property inspections, and they absolutely regretted it. So we're seeing more properties come on the market right now. You have more options to choose from. And when people ask me what direction prices are headed, that is the great mystery. Now, we haven't seen really any huge depreciation widespread to the point where people could say, man, properties are dropping. Like if you're one of these people that expects the price of homes to drop like they did in 2008, 2009, good luck with that. Okay, because I don't see that. Now, sellers are having to be more realistic. We do have some sellers out there that think that they can still get 2021, 2022 prices on their homes, and those are the homes that are sitting in the market for 6, 7, 8, 9, 10 months. But eventually, if they have no choice but to sell, they start to become more realistic. What we are seeing is that list prices are lower, and we're starting to see more and more reduction in list prices. It's not unheard of. It's very common actually for sellers to test the market, want to price their home at or maybe even above market to kind of test the waters. But more and more buyers realize that they have the leverage and they are getting the discounts, or they're getting the credits against repairs, or they're getting concessions. It's a great time to be a buyer. But ultimately, it comes down to what's your situation. Are you ready to buy? And where do you begin? I always feel that the best place to start is by working with a professional realtor. Okay. Now, the next thing is you really want to come down to your DNA. All right. A good realtor is going to sit down with you and say, we got to take your DNA. Same thing with a loan officer. And the DNA stands for desire, needs, and ability. Ultimately, where it comes down to is monthly payment. Let me break it down this way, folks. It's not so much about the price of the house, and it's not even so much about the interest rate. It's what you can afford. Because if you really get fixated on interest rate, you're going to be that person sitting on the sideline forever wanting it to be 2.5% again, which I just don't see in my lifetime ever again. So instead of being all caught up in the price of the house or all caught up with the interest, can you afford to make the monthly payments? And what you can afford is what you should be buying. Yes, we're going to ask you questions about the type of bedrooms you need and what area, what schools are important. Do you need to be close to work? Are you willing to start off with something on a condo or townhouse level? I mean, condos right now, in some areas, are almost being given away right now. So it might be a great opportunity for you to maybe start off with a condo. But we always want to get down to, we know what you want, but what you want is it really what you need? There's what you desire, there's what you need, and then there's what you can afford, right? And a good real estate agent and a good loan officer, they're not going to blow smoke. They're going to say, folks, this is what you can realistically afford, and this is what's currently available. We have people all the time that start out by saying, I want to live in Davie. I want to live in Davie, Florida, because I love the schools. Yeah, we're known for our schools, but maybe the pricing just not there. Then again, you look at Coral Springs, or you look at Sunrise, or you look at Tamarack, and all of a sudden, if you're willing to drive an extra 15 or 20 minutes, you can get an incredible house for less money. And that's what a good realtor is going to sit down with, and that is help you find what you're looking for. As far as selecting a realtor, why work with a realtor? Let's go ahead and start with the fact that not all real estate agents are realtors. In fact, I'm going to give you a piece of advice that I've never given before. Never, ever given before. And I might get in trouble for doing this. And my daughter's shaking her head and saying, listen, you really shouldn't do this. But folks, I'm 66 years old right now. I just turned 66 on Saturday. Yes, I know I look great for my age. In fact, let's just put it out there. I look great for any age. But let's put that aside because it's not about me. I don't have to have any filters. But I would say don't work with a realtor that doesn't pronounce it realtor. You know what I'm saying? If you're working with someone that says, I'm a realtor, and they say, I'm the best realtor in the market, you say you're the only realtor in the market because it's pronounced realtor. Get it? Realtor. Now you know. So we have to abide by a code of ethics. Yes, you have to pass a state license that makes you a sales associate, but not every sales associate belongs to a board of realtors and has to abide by a very, very strict code of ethics. We are required to take continuing education. We are encouraged to take course after courses after courses, so we bring more knowledge to the table. We have access to the inventory. We have the knowledge of the forms and the disclosures. We partner with the right people that can answer your financing questions. And you know what? Where we really earn our money is being negotiating on your behalf. Just being in a position where we're skilled negotiators so that we can get the very best deal possible for the client that we're representing. Okay. So we work with professionals. We work with professional lenders such as Clear Choice. We work with professional title companies such as New World Title. Inspectors, all of these folks that we bring into the equation. Okay. Now, typically, not always, typically the seller's willing to pay our brokerage, our fees, But you know what? There may be situations where you as the buyer might be required to pay some or all of that commission. But that's something that a good real estate professional will sit down with you during the consultation. They'll explain exactly how the compensation works. They'll explain to you how it's handled. And then, and only then, when you're comfortable and understand how it works, then you agree to move forward and start working with that person. Is it a simple process to buy a home? Not at all. It's overly complicated. In fact, it's ridiculously complicated. And because there's so many legal aspects, it's such a litigious business that we're in society, there's just every day there seems to be one new form or one new disclosure that's introduced to just make everyone's life even more miserable. But if you ever wonder, does a real estate agent earn their money? Just understand something. We don't get paid until it closes. If it doesn't close, we don't get paid. You know, the mortgage people on this call, they don't get paid unless it closes. Okay. So we want to make sure that we get from interview to closing. And in between, we have all of these landmines and we have all of these potholes that we have to maneuver. But that's what we do. Okay. We're there holding your hand throughout the entire process so that we can do everything we can to help you get to moving day. Okay. So with that, last and not least is why work with only one realtor? Why can't I just work with several different ones? Well, let me put it to you this way. If you're married on the call right now, there's a chance that some of you are married on the call. You may be married 5 years, 10 years, 15 years or longer. My question to you would be, even though you're married, are you still seeing other people? Or did you get to only pick one? Now, think about this answer carefully because this is being recorded and it could get out there. I think if you're smart, your answer is there's only one person for me, right? And you're looking over at that person with fear in your heart right now. That's kind of like what I do every night. I sleep with one eye open, but that's another story. But the way what I look at it is people go, oh, so you're saying I only get to pick one? Yeah. This is about relationships. You're asking someone to put their all into a transaction that might last weeks and months. And should they invest all of this without some kind of certainty that there's going to be trust, there's going to be a certain amount of faithfulness involved? Yes, you should only work with one realtor. So what I would like to do now, before I turn it over to our lender sponsor, is do you have any questions on what I have covered? Oh, thank you for the happy birthday so far. I know we haven't talked about specifics about loans, but just about the market, about buyer versus sellers market, or some of the benefits of homeownership. Does anyone have any questions about that portion of it that you want to unmute yourself and ask or type into the chat area? And if not, I'll go ahead and do the following. Just introduce you to the lender. So the lender matters, folks. The lender matters. And let me tell you what I always do. Again, by now you probably think, man, Tony just kind of tells it like it is. I do. It is very, very common for a buyer to bring, in many cases, to a realtor some type of approval letter that they've obtained by some lender out there. You know, maybe they started with one of these national companies, you know, to remain nameless and all that. But maybe they went online, they filled out something and they got, hey, look, I got an approval letter. Well, here's how I like to joke about it. Oh, so you got an approval letter from ABC Mortgage Inc. Yeah, huh? But they spell Inc. I-N-K. That scares me a little bit, right? So what happens is a lot of these approval letters are not worth the paper they're even written on. And just like the real estate industry has bad actors, the mortgage industry has bad actors as well. And when somebody brings me, or I teach my agents, when somebody brings you an approval letter from a lender, ask that person, have you ever done business with this company before? And the chances are that person will say, no. I go, you know what? I do this for a living and I've never done business with them before either. Let me guess. This is probably going to be the single largest purchase that you guys are ever going to make. Yeah, right. Okay. So let me ask you, do you just want to roll the dice that maybe this person is good or not good? Or should we maybe get a second opinion from someone that I know, like, and trust? Someone that I work with consistently, someone that I know delivers, someone that I know can deliver clear to close in as little as 6 or 7 days. Should we maybe get the second opinion of this person, or do we roll the dice with this person you've never met before? And I think most people, if logical, will say, well, what does it cost me to get a second opinion? Absolutely nothing. But it can cost you a fortune if you don't. So with that, I'm going to turn it over to Lynette Fernandez and Jory Rivero. And man, this is all you guys going forward.
Hello, everyone. I am Lynette Fernandez. We also have Joey Rivero on the line. I'm sure he'll say hello.
Hello, guys.
There he goes. I'm right on cue. Thanks, Joey. I'm going to go ahead and share my screen here. Oh, let me see if I did this right. Hold on one second. I did not. Give me 1 second. Bear with me.
If you can't,
Can you guys see it?
Yeah, it's coming up.
It's
Okay,
coming
so
up.
let me just.
There we go.
How's that? Did it work
click.
You
properly?
see it. Yep.
Do you see all my slides or just the one?
No,
No, we see them all. So
your
you have to hit
slides.
play.
Click on the bottom
There we
right
go.
slideshow.
Oh, did I do it right or no?
There
We
you
good?
go.
Hey. Okay, I'm better at doing loans, guys, I promise. All right. Okay, so what you need to know before buying your first home. I'm gonna say right now, we're gonna go through a lot. There's no exam at the end. Don't worry about it. We're here as a resource so we can connect afterwards. This is meant to give you like a taste of what's involved. So fear not, we've got you. Let's see. All right, a little bit about me. I've been happily married. I say happily because I'm happily married for 23 years, been together for 28. We have two beautiful kids and we have a little dog named Finn. Sometimes it helps to put a little story behind the face there. So I'm Lynette Fernandez. And then we have Joey Rivero. He's Mortgage Broker Joey on Instagram if you want to give him a follow, and his beautiful family there as well. Are you going to boast about
It
your
is.
daughter? Or
Yeah, my daughter just started at FSU this year, and my son's a pilot. We grew up here and raised my kids here in Broward County. Been married for over 20 years and been with my wife for 29 years. So we would
she's a
dated
saint.
before marriage. So no, she's very lucky to have me.
Oh gosh.
So
Okay, moving on. A little bit about Clear Choice Lending Group. He's the owner of. We have an amazing team behind us. We have a processing team we just work so well together and we get everything done and quickly. We're bilingual. We really pride ourselves on having like a worry-free process and on-time closings. Even more than that, we surpassed that. As Tony mentioned earlier, we've done clear to close in 6 days. You don't know much about that industry, but that's a lot to be done with a loan in 6 days and then just not have to worry until we get to closing, which is nice. Because we're mortgage brokers, we have access to multiple banks, so we can offer competitive rates. So we do all the shopping for you, which is nice. So we're going to make sure that you get a program that fits your needs at the right price, that fits your budget. And the most importantly, we care. You're not just like another number for us. We're right there in Sunrise. We want to see you guys achieve your goals of homeownership. So we actually care about you guys. Okay, there's a lot going to be happening today. Take notes. It's going to feel like a lot, but that's why you're here, right? Every scenario is unique. So just to make sure you schedule time to follow up, we can go over your specific questions and get you started. Even if we have the conversation now, you're not obligated to do anything. We're just having a conversation. So even if you're not ready now, we can go ahead and plan ahead for the future and get you ready so that when you are, you're ready to go. And then as Tony mentioned before, who you work with matters. We've got you every step of the way. Okay. We're here to help you guys. So let's talk about some of the myths. A myth is that you should wait for the perfect time to buy. Here's the truth. There is no perfect time. The best time to buy is when you're financially ready. Okay. I know some people say, I'm going to wait for rates. You wait for rates, sale prices can go up because everyone's going to start shopping. So there is no perfect time. As long as it makes sense for you financially, that's the time to buy. Another myth, you should max out your pre-approval amount. Let's say you're pre-approved for $500,000. Should you buy a home at that price, or should we look at your budget and see what you can actually afford? So smart buyers are going to choose a payment that fits their comfort zone and not just go for the just the pre-approval amount. Again, we care. We want to know what your budget is. We want to make sure that you guys are comfortable making those payments, because we're looking at like long term for you. Let's switch. Okay. Online mortgage quotes are accurate. They are not. Online numbers often exclude fees, taxes, insurance, HOA, and it can be very misleading. Sometimes they're out of the state. They don't know what insurance goes for in the area. We do. We're local. We do loans in this area, so we can give you more accurate pricing. And then we don't sugarcoat things. We want to make sure we're very transparent with you guys because we want you guys to succeed. So we're not going to tell you what you want to hear. We're going to be very realistic with those numbers, just to, again, make sure that you guys are okay financially in the process. Another myth, pre-qualification is the same as a pre-approval. It's not. Only a pre-approval proves that you're financially verified and ready to make offers. Okay, so you can get pre-qualified. Again, you can put in some numbers on the computer. It'll put something out that says that you are, but really, have they gone over your financial documents? Have they looked at paycheck stubs? Have they looked at just different things? Have they verified employment for you guys? So it's not the same thing.
That's kind of where you hear, that's where you kind of hear a lot of the horror stories. They come just from that piece. The horror stories of, oh, I tried and I couldn't get approved, or oh, I tried and didn't get to the closing table. And that's just because there's companies out there that won't do all the work prior. And that's really where it comes in.
So when we say that you're pre-approved, we've done our due diligence. We've checked everything out. We've assured your realtor so that when we submit the file, we know we're going to get you guys to closing, right? You don't want to spend money on inspection and appraisal, get emotionally attached only to find out the deal's dead, right? No one wants that. So we do all that from the beginning. And if you have questions, go ahead and put them in the chat. Joey's going to be monitoring that as well. So we'll get those questions answered, okay? Another myth. Renting is safer and smarter than owning. We touched upon this a little bit. I don't want to be redundant, but it's worth hearing again. Renting doesn't offer stability. Okay, home ownership is going to build equity. It protects you from rising rents and it gives you long-term financial security. That's important, right? I want to make sure that I can afford the rent, or I'm sorry, my mortgage. But if rent goes up, I don't know what's going to happen. Do I have to move? Is my landlord paying the mortgage? All those kind of things create instability, right? We don't want that. We want to make sure that we have some control over that. Another myth is renting is cheaper than owning. Again, you saw the video with the numbers. You see that in many areas, a mortgage can cost the same or less than rent that you build in equity. I'm a homeowner. I talked to some of my friends who are renting. In most cases, they're paying more than what I pay in a mortgage. Okay. So let's talk about some of the truths. Anyone can use FHA. FHA doesn't have anything to do with you being a first-time home buyer. That's a big misunderstanding. So even if you're not a first-time home buyer, you can still qualify for an FHA loan. Okay. Another truth is that you are considered a first-time home buyer after not being on title for 3 years. So even if you owned a home 10 years ago, sold it 5, you are now considered a first-time home buyer again. All right. You do not need 20% to buy a property. Depending on your credit, you can get in with as little as 3% down going conventional for a first-time home buyer. Student loans do not prevent you from purchasing a home. If you're self-employed, you can qualify for a loan. If you have a non-occupant co-borrower, you are allowed to co-sign. So let's say you want your mom to co-sign. She's not going to live in the property. She can be a co-signer. Okay. Having a bankruptcy or foreclosure does not disqualify you. Depending on the amount of time in between, we can make it happen for you. Should we stop you for questions or do I keep going? I want to be mindful of time. We're good. No one's put any questions in the chat? Anyone fall off yet? Everyone
Yep, I got you.
still there?
Nope, we're all
Perfect.
good. No questions.
Okay, so what are lenders looking for? There's 3 main things they're going to look at, right? They're going to look at credit, income, and assets.
Questions? Yes, Leonard, I have a question.
Oh,
Sure.
yeah.
Hi. So I own a property that purchased in 2024. If I'm going through a divorce, finalizing 2026. If next year, I'm not on the loan, I'm on the deed only. If next year I want to purchase a home, can I qualify for first-time home buyer?
I can answer that question. Yeah, you would be able to. There's circumstances that would qualify you. So there are some loan programs that you'd still be able to just put down as little as 3.5% with no problem.
Okay, the down payment is not an issue. It's just that I want to be able to, qualify because I thought it was like 2 years minimum.
No,
To get out.
no, that's not it. You're good there.
Okay, okay, perfect. Okay, so that's good.
And only because she touched upon it, Joey, can you explain? I know people get caught up on like the first time home buyer benefits. What are the real benefits of being a first time home buyer? I think people get so caught up in that they lose focus of the bigger picture.
So the bigger picture for her first-time home buyer is really just a little bit of a break on the down payment. Where on a first-time home buyer, they allow you to put down as little as 3%. If you're just going to buy your second, if let's say you sold and you want to buy again, and you're not a first-time home buyer, it's only difference is instead of doing 3%, the 5% down payment rule is what comes into effect for conventional. And then for FHA, you can still buy again, use an FHA loan, and still go 3.5%. So a lot of people do get caught up in that, and there really isn't that much of an advantage to it, especially if you've got the down payment, you'll have no issue.
Thank you. Yeah, we hear that a lot. They get so caught up on being a first time home buyer, and I'm like, don't worry about that. Okay, so let's go back to this. Okay, credit. When it comes to credit, there's three credit bureaus. There's Experian, Equifax, and TransUnion. Typically, what happens is they're going to look at the middle of the scores. Okay, so the great thing with, again, being with the mortgage broker is that we have various programs, right? So for FHA, they go as low as 580 typically. And I say typically because if you have a bigger down payment available and your score is less than 580, we still may have a program that works for you. Okay. To go conventional, you usually need to have at least a 620 or higher. And if it's a VA or USDA loans, they're flexible, but often 600 or higher. So if you're not sure what your credit score is, I want you to take a look at downloading the app. It's free. It's through Experian, so it's a trusted because again, they're one of the credit bureaus. Please do not use Credit Karma. They're off by so much. It doesn't help you in any single way. So when it comes to mortgages, the one that reflects a more accurate score is going to be Experian.com. So again, download the app. It's absolutely free. It'll give you an idea of what your score is. Because when we start having the conversation, we're not going to pull credit now. I'm gonna want to know what your score is, right? Because score is gonna affect pricing and everything else. So this is a good way to get it for free.
Yeah, and if you don't know your credit score, it's you might as well do it tonight. Do this as your homework. It's something just a great way to get started.
Absolutely. And again, it's free. It's trusted, secure. We have it downloaded. We use it as well, but it definitely is the most accurate for when it comes to our credit scoring. All right, do yourself a favor. I'm gonna say it right now. We do not sell your information at all. Credit bureaus tend to do that. So, as you're beginning this process, I would suggest that you take a screenshot or write down these two sites, optoutprescreen.com and do not call.gov, and go ahead and put your information in there so that you don't start getting inundated with calls when it comes to mortgages, because we do not sell it. And again, depending on the stage, that won't happen until we pull credit. But at that point, that's when it's typically done. Go ahead.
Okay, and you should also do this even if you're not going to apply for a mortgage today, because this will help you with all your telemarketing calls.
Oh,
Just,
yes.
get yourself on there. Somebody did ask a question about the cosigner. What she was just letting you know is that you can always have a cosigner help you purchase. They don't have to live with you. So
And
you
even
can
if
have
they own something else as well, just depending obviously on their finances, that can work in some scenarios as well. Which is why I was trying to say that each scenario is different. So let's have that conversation to see if it works for you.
yeah.
Thank you. All right. So they
You
also
got it.
look at income. Okay. Whether you're employed or self-employed, that's fine. They look at the length of time on the job. So not necessarily being on the same job, but the fact that you have like a 2-year work history, right? The same for a second job. If you get a part-time job and you only been working at a part-time job or a second job, sorry, for a year, we can't use that income. If you've had a second job for 2 years, we can go ahead and do that as well. The good thing is that recent graduates can also use their education as part of the required 2-year employment history. So if you went to school to be an accountant, you were in school for X number of time, then you get a job as an accountant, that schooling counts towards that 2-year work history. Okay. Any questions on income? You guys can just continue writing questions in the chat and then Joey will intervene just to keep things flowing. All right. So when it comes to income, they're going to look. Oh, sorry, we did income. Assets. Here we go. All right, liquid assets. Okay, what do you have in your checkings? What do you have in your savings account? We can look at funds in the retirement fund or 401k. You can get gift funds from acceptable sources. You're not allowed to borrow funds, cash or credit card advances are not allowed either, right? Because that's just accruing more debt. They don't want you to do that. We're looking at your debt as a whole. So if you're having to accrue more to do it, that's not going to work. They are going to review your last 2 months of bank statements. That if that's where you have your account, they're going to want statements. They're going to want it seasoned. So that's what we call seasoned. They're going to want to make sure it's in an account and that it's in there for at least 2 months. Okay.
So just like a
Yeah.
pointer, if you have cash in your house right now, okay, and you're like, oh, I'm one of those people like my grandfather who kept money in like his sock drawer or
Hmm.
hidden away, you need to open up a savings account and put it in there and let it sit or marinate for 60 days.
Yes. So let's say,
And we do have a question on the chat. How much does a family have to make to qualify? That action is that's a huge question. So it's not about how much
it's a
you
loaded
need to
one.
make. Yeah, it's a very loaded question. It's one of those things that we review with you on an individual basis. A lot has to do with the debt. It's not really about a family. It's about who's borrowing. So the family amount doesn't really have anything to do with it. It's more about who's going to be on the mortgage and what kind of debt load they bring on and how much versus how much they make. And then we work backwards and we can tell you what you can purchase. And we can do all that without actually pulling your credit. So I just want to make sure everybody knows that. No charge. We can review your income documentation for you and make sure we can help you determine how much you can purchase.
Absolutely. And just going back to what Joey said before, if you're one of those that, again, that you have money in your house, when we talk about being seasoned, just to give an example, if tomorrow you went to the bank and you made the deposit, you're going to let it sit there for September and October because we're going to want to see those statements. If you deposit it in September, we're going to have to like wait until you get an October and November statement. Okay. So like that's what we mean by seasoned. It has to be in an account. When it comes to bank statement, they're going to be looking at cash deposits, any undisclosed debt, if you have child support, alimony payments. When we ask you for bank statements or anyone asks you for bank statements, please send all the pages, even if they're blank. They want that. And then no need to alter any documents. You don't black out any of the info. We're gonna see all that stuff anyways. It doesn't matter. This is a safe place for you to share your information. We don't discuss it. It's all private. So just make sure we get everything because again, the more we know, the more you disclose to us, the better we can help you. Okay. So let's talk about some of the common loan programs. Some of them you're probably familiar with. I feel like FHA is one that people hear the most often, but there's different programs. So we have conventional. I put on there that you can get into it with a minimum of 3% down for first-time home buyers, and then 5% down if you're not. When it comes to FHA, whether you're a first-time home buyer or not, you can get in with 3.5% down. The benefit of this tends to be flexible credit. Again, they go lower with the scores, so there's more flexibility. With VA, zero down, which is amazing. So if you know any veterans or you're a vet, thank you for serving. First of all, you have some great benefits out there. You should be utilizing them. And then we also have non-QM loans. So what does that mean? If they don't fit into that perfect little box, there's other programs that will work for you. So maybe we're doing a bank statement loan if you're self-employed. Maybe we're doing a DSCR loan for an investment property. Maybe we're looking at a foreign national loan. We're going to have the conversation and we're going to help you determine which program is best for you.
And also, let me just say
Yeah,
this, and if none of them work at this time for you, we're going to put you on a plan and say, okay, here's A, B, and C. Let's do this, and then we'll be able to get you into a house. Sometimes it might not be now,
absolutely.
maybe 6 months down the road, and maybe a year down the road. But we're able
Absolutely.
to give you that plan and help you get that, achieve the goal.
Yeah, that's what I'm saying. It's better to have the conversation now so that you know what you're saving for, right? You know exactly what you need so that when you're ready, when that lease is over, whenever the case is, you're ready to buy. Down payment assistance programs. Yes, there are programs available. All of them have pros and cons. That's a separate discussion that we are not going to get into today. But we can definitely discuss eligibility with these programs once we're going over the application, right? Because everything's based on income and everything else. So once we have all that, we'll go through all your options with you. I will say this, there's often no such thing as free money. Okay. Some of them have very strict programs when it comes to like how much you earn, how long you live in the house, and everything else. So just so you remember that. And just because you qualify doesn't mean that you should utilize it. Again, for example, in a situation where they're assigning a rate, what if you have the money and you can get a better rate with another program? It may be worth exploring that as opposed to using the down payment assistance program. So we won't go into that. That's more of a conversation that we have when we have your application and discussing your options with you.
Yeah. And so just let me just say on that is
Yeah,
that if you right now you haven't saved the down payment, that's why you want to talk to you and say, hey, well, look, you don't have a down payment, but we can get you into this program where you don't need a down payment, and then you can try to buy it in that route.
absolutely. Okay, so what's the mortgage process look like? It all starts with a conversation. Even though that's not on there, we could have a conversation. Let me hear about your scenario. Let's see what would be the best thing. And then we do the application. Absolutely free, no obligation. As we're having the beginning conversations, as we're starting this, if you don't feel comfortable giving us your social, that's fine. We're not running credit. You can put all ones. I want to see the documents. I want to take a look and see what it is you're working with so we can look at your options. Once we've gotten the application, we've received all the documents that we need, which I'll talk about documents coming up. We're going to do what's called a loan analysis, right? We're going to take a look at your income, look at DTI, and see what your options are. Again, we're going to see like what the highest sales price can be. How does that fall within your budget? So we're going to take a look at all of that. Once we pull credit, we're going to go ahead and issue a pre-approval. At that point, you can start looking at homes. In most cases, you can't look at homes without a pre-approval because it doesn't even make sense to do it without it because how do you know how much you can afford? What if you can only afford a home that's 300,000 and you're looking at properties for 500,000? That doesn't make sense, right? So we want to see sort of where you can afford, what you're comfortable with, and then you're going to start looking for homes. Once you find a home with your realtor that's invited you, you're going to get that contract signed, you're going to send it back over. Then we're going to go ahead and we're going to have another discussion. We're going to lock in your loan. So when it comes to rates, rates fluctuate every single day, sometimes multiple times in a day. That does not get locked in until you're under contract because then we have a date, right? Because there's a certain amount of time you can lock it for. We're going to go ahead and submit your file. Since we've done our due diligence, we've collected most of the stuff at the beginning. We're hoping that when we submit the file, we get a conditional approval with very little conditions, right? Because we've done all the work ahead of time. Then we're going to get some conditions. Maybe they're asking for a lot of explanation on this, or they ask for one more document verifying that. We submit that with the hopes of getting our clear to close. After the clear to close, you have a closing date already set in mind for when you sign the contract. We fund the loan. You guys are officially homeowners, and that's pretty much it when it comes to the mortgage process. All right, when it comes to documents, typically we're going to ask.
And real quick,
Yeah.
just so you guys know, that other process, it's a 9-day, 10-day process for us on average.
Oh yeah, the clear to close.
We're
You
home with
see-
a 10-day clear to close. That's
Yeah,
what
no,
our
I just
average
did 2
is.
condos recently from from that to clear to close, it was 6 days. So we can make it happen quickly. Okay, we're gonna look at paycheck stubs. We're gonna want 30 days with the paycheck stubs. We're gonna want 2 months of your bank statements or the assets statements. We're gonna need your ID so we can verify you are who you say you are. Whether it's W-2s or 1099s, we're gonna need 2 years of those, and then in some cases we may ask for your tax returns. But once you submit the application, you'll get an email then requesting these documents. So everything's automated through a secure portal. You submit your application online. That gets reviewed. We go ahead and ask for documents. You submit that, and then we do the analysis. So, what are your typical buyer expenses, right? So sometimes people don't know what they're getting themselves into. So let's talk about that. So down payment, that's going to be anywhere between 3 to 5%. In some cases, more if you want to give more, but we're saying bare minimum, first-time home buyer, conventional 3% down, FHA 3.5%. Then you're gonna have to give an escrow deposit. So out of that down payment, you're gonna tell the seller, hey, I'm gonna give X amount and I'm gonna put it into an escrow account. It makes them feel better. That's what an escrow deposit is. Inspection is gonna cost you anywhere between $300 to $500. Again, these are just estimates. This varies. Your real estate agent's gonna hook you up with a great inspector to go ahead and do that. The appraisal's ordered by the bank. That's something that you pay out of pocket ahead of time. And that's anywhere between $500 to $700, depending on the size of the property and what kind of appraisal is needed. And then closing costs are about 3 to 4% of the sales price. But when we're having these conversations, I can go ahead and give you a loan estimate so you have a good idea as to what you're looking at and how much you have to save and where you need to be at. So it's all going to be broken down for you.
Let me just say a couple things here. One, it's very important that we do the pre-qualification piece up front so that we can save you money up front. And the reason why I say that is there's people that go into contract, they pay for a home inspection, they pay for an appraisal, and they don't close because the lender didn't do the job up front. And that's why we do everything up front to make sure that doesn't happen to you. The last point I want to make here is on closing costs. In the beginning of the call, you heard Tony talking about the market and the state of the market. And I'm not saying time's running out and I don't know when the market's going to shift. And my crystal ball's been on Amazon order for years. Okay. But the closing costs right now, we are seeing a high percentage of our closings get a concession. And that's what he means by that is where the seller is actually willing to negotiate and pay your closing costs. I'm not saying it's happening on every single deal, but we're seeing it probably 5 to 6 out of 10. It's happening. So typically you don't have to right now. There's programs where we can try to get you the 100% financing, have the seller pay your closing costs. You're coming out of pocket a couple $1,000s to buy a home, especially if you're a veteran. If anybody's a veteran on here, it's, you're getting in with nothing. So just keep that in mind. And that's the strategy that we put together when we're working on getting you approved.
And that's why it's important to just have the conversation, guys. That's why we keep saying it. Every situation is different. Some people feel defeated before we even start. Let's just have the conversation. Let's see what we can do for you guys. All right. So, what comes along with being a homeowner? What are your costs? What are your responsibilities? The mortgage itself, right? Principal and interest, property taxes, homeowners insurance, sometimes flood insurance. Are you living in a place that has a association? Then there's the maintenance, the upkeep, and utilities. So basically, what we're trying to say is we want you to shop based on the monthly payment, not just on the purchase price. Because you have to factor in that you are going to be paying utilities, you are going to be paying maintenance, right? So some people forget about those things and they get so caught up on the sales price. So again, we want you guys to be responsible homeowners. We want to make sure you guys are succeeding, and we want you guys to consider those factors. Okay, so your payment is more than principal and interest. So what goes into it? Again, just reiterating what we said before. Principal and interest. You're going to be paying property taxes, homeowners insurance, mortgage insurance if applicable. And then if you're part of a townhouse or a condo association, you're going to be paying that. That's what your real monthly housing cost is. Okay, so we're going to have those conversations as well. All right, that falls into establishing a budget. So you guys really should like think, okay, well, what are your monthly payment goals, right? What are you comfortable paying each month? And then discuss that comfort level with the down payment and closing costs. So we want you guys, this is all things that we're going to do with you, not necessarily work on a budget with you, but we're going to ask you, hey, what do you feel comfortable with, right? Because we want to know, we want to make sure that you're comfortable making those payments each month.
And a good piece of homework for you guys to do today is, or whenever you want to, besides check your credit, list out all your expenses and look to see what you can reduce or cut out. I know people that have 10 different subscriptions to Netflix, to Paramount, to YouTube TV, to football, and I get it. But,
Or
those
coffee
things are
addiction.
nice. Yeah, or coffee addiction, right? Try to cut that out to try to make your budget. And I'm not saying it because I want you to spend more. I want you to buy more that you're happier with. The worst thing you can do is buy something you're not happy with or just settle. I have clients, we see clients sometimes they got a $700, $800 car payment. And I get it, they love the car, but you don't live in your car. So, try to reduce that or turn in your lease and buy something less expensive or lease something less expensive because your home is going to be more important. The worst thing you can do is buy a depreciating asset, such as a high vehicle, or, if you happen to have like a toy or something, it's a depreciating asset where your home is going to appreciate.
Absolutely. All right, so let's talk about some of the biggest buyer mistakes to avoid. Okay. Get pre-approved before you start shopping. That's what I said before. Why are you out there looking at properties you probably cannot afford? It's better to know what you can afford and what you're comfortable with before you spend time shopping. All right. Not budgeting realistically for your total monthly payment. We were just talking about that. Like let's have real conversations. We're not gonna just tell you what you want to hear. We're gonna be nice about it, obviously, but we want to tell you like, hey, this is realistically what you're gonna look at paying. Um, don't just choose a lender based on advertising interest rates. In most cases, it's a bait and switch, right? They're going to get you with that. And then that's if you qualify, based, like all that fine print on the bottom, that's like a paragraph long, it may not qualify. So we want to have real conversations, realistic ones. Do not buy or lease a car before closing. So again, if you're in the process right now and you're thinking, oh, I have to go ahead and trade my car in, think about it. Okay, well, what's my payment going to be like? Can I use some of those funds towards the home? So make good choices. But once we start the process, it's not the time to make any major changes. So do not buy or lease a car before closing without talking to your lender first. Opening or even closing credit card accounts before closing. That's not a good idea. All right. People think, oh, I'm going to close this account. Don't do it. Some people get very excited and they want to open up a furniture credit card to buy furniture for their home. Don't do it. Even if they're not opening a new account, they're putting it on their credit card. Do not start doing that because all those changes can affect you. Did you want to say
Yeah,
something, Joey?
sometimes you think that you're going to close an account and help your credit score, and sometimes believe it has a negative impact. So
Yes,
we just kind of tell you to kind of freeze when it comes to finances while you're in the process.
absolutely. Don't run up your credit card balances. Don't do that. Um, don't try to be a nice person and co-sign for anyone. Let's say you want to help your cousin get a car. Don't do it, right? We don't want it to affect your DTI. Changing jobs without speaking to your lender first. Again, we want to make sure we're having those conversations. Don't make large or unusual deposits without documentation. Remember, they're going to be looking at your bank statements, right? So if there's a deposit for $7,000, that's a red flag. They're going to want to know where it came from. Now, if you sold your car and there's a car receipt or something like that, we can go ahead and verify it. But let's just be mindful of those things. Don't move large amounts of money between accounts. Every time you do that, we have to show where it came from and you have to provide statements from that account. And then they're going to look at that account and maybe they're going to have more questions about that. So we want to limit all that money moving just to avoid possible like more conditions from the bank. Let's not spend money set aside for your down payment or closing costs. Again, we want to make sure we have that money set aside and that's good to go. So if you have any doubts, just ask us before you do it. And then again, we'll say these same things when we're in the process as well. But just start thinking about all those major moves as you're trying to buy a home because all those things affect you. So is now the right time to buy? Again, it goes back to it depends if you're financially able to do so, right? So let's have that conversation. So before you look for a house,
I just want to
I'm
say
gonna,
something real quick about the
yeah,
now the right time to buy.
yeah,
There's really, if you're planning on moving out of state in the next year, probably not the right time for you to make a decision to buy something here, unless you eventually want to turn it into a rental property. But if you're going to buy, and this is where you're going to live, and you're raising your family here, you want to establish your family here. I've owned property. I'm 25 years now. I've had properties, and I can tell you now, pick any single address and go back 10 years or 15 years and tell me what it was worth 10 or 15 years ago, and that's including the crash, and tell me what they're worth today. And you will always see that there has been a huge increase in real estate. Real estate is a guarantee to go up because guess what? We don't have any more land. There's no more land here. There's no more in South Florida. We're like tapped out to build something. So it's just one of those things that's going to go up with inflation, just like everything else does. Just like you listen, when I was a kid, I'm sure you guys remember this, the 29-cent burgers from McDonald's,
I
the
miss those.
39-cent cheeseburgers. I miss those too. I went to
Not
McDonald's
like
the
two
other day.
dollars.
I had to go to the McDonald's the other day because I was craving it. And I was like, you know what? Let me go through. Do you know a Big Mac meal costs like 13 bucks? It's wild.
Not right.
So, it's not right. And it's a depreciating asset too, because it's worthless after you eat it. But, it's one of those things where, you know what I tell you, the right time to buy is it is when it's ready, when you're ready, but it's whenever you're qualified. When we say, hey, you're good to go, then it's the right time to buy.
Absolutely. I'm gonna skip this. Let's go right to questions. Do you have any questions? And then put them in the chat before we do that.
Yeah, yeah, or unmute yourself if you want. But yeah, there's no bad question. And then we really want to encourage, any questions, anything you didn't understand, please bring it out. And
Yeah,
also, just so you know, these consultations that we're talking about talking to you or setting up with, this can be done by Zoom. This could be done in our local office right here in Sunrise. This can be done in Davie, at our partner's office
yeah,
at Extreme. This can be done, at a coffee shop if you want to do it at there, or, however you feel like, or just by phone. These are done
yeah.
30 minutes to an hour, and it's a great way to find out with no cost to you. And it's a great way to find out or get prepared to become a homeowner.
Yeah. Hey,
I
Joy,
do have a free gift for you guys. Wait,
if you
Oh,
sorry.
would, Joy, would you explain, because a lot of folks don't really understand the difference between a mortgage broker versus working with a big bank or a credit union or one of these retail lenders. I think that this is something that they really need to know.
yeah. So, and 100%, we are mortgage brokers. And the way that I like to see it is we kind of get your information and then we get to take your information from one credit pool, one application, one set of data, and we get to look at it with 13 different lending institutions. In fact, Tony's been to, and a few people on this call have been to the number one mortgage institution. It happens to be here in the US in Michigan. We've gone to their facility. They're the biggest lender in the country. They do trainings for us there. So we get to take your information. We can look at with UWM, with Rocket, with Mutual of Omaha, all these big banks, and they basically bid out for your business. When you're working with like a Bank of America, you're just dealing with Bank of America. You're dealing with their product. When you work with Navy Federal, you're just dealing with their product. So you've got one set of product where I've got unlimited sets of products to make sure we're shopping and getting you the best loan for your money.
Yeah, absolutely. I do want to say, we can still collect questions. Meanwhile, I do have a free gift. It's an extensive first-time homebuyer guide. So I know we touched on a little bit of everything, but I've created a homebuyer guide that if you're interested in, it's absolutely free. You can scan that code and I can send that to you. If you want to schedule time to speak, another QR code. that you can scan, or you can email me. I'm going to put my information on there while we're answering any questions. Um, and then this is me. You can give me a follow on Instagram. You'll get information that way as well, but my contact information's on there. Meanwhile, do we have any more questions? Joe, you're muted.
Yeah, I don't see anything on here so far.
Were we that good? No. Either they either they fell asleep or we were that good.
Well, we're going to actually also send out a little, we'll try to send out a survey because we always want to improve on this. So if there's something that you feel like we didn't miss or something we could help, help, we only learn from what we get from you guys, right? So anything you guys, any comments or anything that we didn't cover, anybody on here that we didn't cover something? Yes, we're still here. No questions as far as thank you.
Thanks for verifying you're still there. I appreciate it.
Thank you.
I know it's a lot to take in as well. Again, you may not have something on the spot. It may hit you later on. Reach out. I'm definitely happy to have those conversations. Again, Zoom, in person, phone call. We're happy to help. We know it's a lot, but all we want to do is have a conversation. It's a no obligation conversation, just to see where you're at to get you where you need to be. That's all we want to do. We just want to help you.
Okay, well, I think it was great. A lot of information in a short period of time. What I do want you to do, folks that are on the call, that are guests, is reach out to whomever invited you to be on the call. One of you mentioned Ava, another one Lucinea, maybe it was Elva. Whoever that realtor was, hopefully it's one of the ones on our team that reached out to you and invited you. Reach out to them now. Let them know what you thought of the class, if you have any questions, and to discuss a plan of action going forward. If you didn't or just found out about us and you didn't really talk to a real estate agent, then, by all means, feel free to give us a call. I'll give you the phone number for our office. It's 954-530 0211. So it's 954-530-0211. And then at that point, you say, listen, I was on the call. No realtor invited me. I just found out about it through Facebook or whatever, but I would like to have a conversation. Then we will definitely connect you with an excellent real estate professional to help you and also connect you with Joey and Lynette. I think that does it, folks. Thank you for your time and attention. We will send out this replay to everyone that did register. There are quite a few people that did register for whatever reason we're not on the call. We'll get this out to them. And if you know someone, because people tend to know who else is maybe looking for a property, don't hesitate to share that link with them as well, because you might be doing them an incredible favor. So thank you for your time and attention. We're here to help you with your real estate needs. Stay safe, everyone. God bless. Bye-bye.
All right, thank you.
Bye.
Bye-bye now.
Thank you guys.